Hey guys, this is Mr. Roxy coming at you from West Palm Beach in Florida. It seems like I have broken my video editing equipment, so what I'm going to do is I'm going to shoot this thing live in one take, and you're just going to have to watch it warts and all. So if I screw up along the way and mumble and stumble, forgive me, but I'm going to give you the best I can in one take. So I do want to talk about Occidental's Q4 2020 earnings call that they had yesterday afternoon, the one that I missed because I had to go to another board meeting. And even though I asked them to delay their earnings call by a day or so that I could join, they just refused to do that. So, I had to go and look at the transcript and go and look at the slides all by myself, all alone. But anyway, at least I have you guys to complain to. So here we go. I'm going to see if I can figure this out as I go. I'm doing this, as I said, in one take. So forgive me if I screw up, but this is kind of what it looks like. So let me open this thing over here because it's an actual slideshow. And I could probably move myself out the way. I'm not sure what it looks like to you, but I'll figure it out in a minute. Anyway, this is the fourth quarter earnings slides of Occidental. I'm going to go through just a few slides, and then what I'm going to do is I am actually going to dig into the Q&A session that was held at the end of the call when people were asking Vicky and her team some questions. So let's take it away and see what's going on here. So firstly, I highlighted for you fourth quarter 2020 highlights, 0.8 billion. So almost $1 billion in free cash flow. And Dr. Yeti has been telling us that he expects Occidental to generate approximately 6 billion in 2021, or over the next year. I think it might even be better than that. $2.4 billion in divestitures closed for the quarter, and $2 billion of refinancing also completed. Other success stories, and of course, this is from Occidental's marketing department, not from me, so you would expect it all to be entirely good news. $2.4 billion debt reduction in 2020, $1.8 billion reduced overhead budget continues into 2021. That's a nice carry forward. $2.9 billion 2021 capital budget prioritizes free cash flow. Who doesn't like that? $7 billion in near-term debt extended through to 2025. I can tell you with confidence that Occidental right now has no problem servicing any near-term debt. In addition to the fact that they entered the Q1 period of 2021 with about $2 billion in cash, they still have a $5 billion undrawn facility that's available to them at any time should they need it. 22% 2021 base decline and a $2.3 billion remaining divestiture program for 2021. If we look at the divestitures, you can see over here on the right-hand side, just underneath my very pretty face, that there is approximately $2 to $3 billion earmarked for divestiture during 2021. The other thing I wanted to highlight is right at the bottom of the screen, really small, it says net of taxes. Occidental guides for international taxes at 45%, so it's almost half the value. It's just something to keep in mind as you see the divestitures rolling in and out of the system. Cash flow priorities, we've seen this before. This was not dissimilar. In fact, it was exactly the same for the previous quarter. The current focus, maintain production, debt reduction, medium-term sustainable dividend, reinstating the sustainable dividend and growth capital, and longer-term repurchase shares and retire the preferred equity. Of course, that's the Berkshire Hathaway preferred equity, and the reason why I circled it in red is because it comes up in the Q&A, which I'm going to cover in just a second with you, and then you'll know why I drew this red circle around it. The fourth quarter earnings results, by now you probably know, so this is old news, 0.78, so the loss was 78 cents. I was expecting around 30 cents, but my calculations on the back of the napkin didn't account for the $850 million differential as a result of the Colombian divestiture. Therefore, the diluted earnings per share was $1.41, negative obviously. And then you have your cash flow or your free cash, 1.4 billion before working capital, and after capital expenditures 0.6, and there's your 0.8 billion that they generated in free cash flow for the last quarter. Unrestricted cash balance as of December 31st, $2 billion. Nice. Couple of little things here. This is a very interesting one. So we know from before, Vicky mentioned in a previous call that a $1 change in the price of WTI equates to approximately $200 million in annualized cash flow. Now, of course, if WTI were to go down, that would be negative $200 million in cash flow. But, at the time of this particular presentation, WTI was already trading at around $60 a barrel. Now, at the end of December, I think it was trading at about $40, maybe $42 per barrel. And now we're up already $20 per barrel from that point. So you can kind of do the math yourself on that one. Here's a little breakdown. Just diving one level deeper, $185 million per $1 change in the price per barrel on WTI, and $30 million for a $1 change in Brent. So let's look at some of these analyst Q&A questions that came up. I'm not covering all of them. I've just picked a few. There were a couple of questions about emissions-free power, direct air capture, and all that kind of stuff. Brian Singer from Goldman Sachs said, what are you guys looking for in 2021? Vicky has the ability to speak at length about direct air capture and OXY low carbon ventures and emission-free power and managing to become net zero prior to 2050. In fact, I think the target date was 2040. Vicky can talk for as long as you are prepared to listen. She is very well versed and very eloquent when it comes to talking about things like the environment. Vicky commented and responded to Brian by saying, well, the first thing that was a real milestone for us, which was announced yesterday, so that would have been on Monday, our selection of our engineering construction company, Worley. I did not know about this one. I don't know anything about Worley, but she says they are an incredible company. And Vicky is doing a good job as president and CEO. So if she says Worley is incredible, it probably is pretty good. You already probably know about the United Airlines partnership with Occidental to build this direct air capture, because they all share in the same vision that we do. And we, in this instance, is Occidental Petroleum. We are hoping to get that done by 2022. Looks pretty good to me, all positive. Paul Chang had a really interesting question. He said, why are you putting the preferred equity at the bottom of that little time plan graph that I just showed you a short while ago? Why is retiring the private equity of Berkshire at the bottom? Why is it a long-term goal? Rob Peterson, the CFO, replied, and he said, as it relates to Berkshire, the way the agreement works is that in order to retire principal, we have to have at least $4 per share common distribution over a 12-month period to even open a discussion for a one-on-one basis down on the Berkshire preferred principal. Now that's very interesting, because what it does is it actually gives you an indication that before they even will have a discussion with Berkshire about retiring that preferred principal, a $4 per share common distribution of dividends has to be reinstated for a period of 12 months. So you can kind of get an idea of where it's going in the future. Somewhere along the line, so midterm, medium term, Occidental is looking at reinstating a dividend, and this is kind of like a target price, but who knows? We'll see how we go. Dan Boyd from Mizuho Securities also talked about emissions target and carbon capture. There are lots of questions about this. He also talked about tax credits. Vicky said his question was tax credits or sequestering. And Vicky said we plan to use both. We have the largest infrastructure of any CO2 enhanced oil recovery in the world in the Permian. We have the pipelines we need to move the CO2 around to wherever we need it to go in our own fields. And we also have the gas processing plants and supporting infrastructure for those plants and the pipelines. Neat, huh? Dan also added, your goal to becoming carbon neutral and united as a partner. Are you also talking to companies like Amazon? And Vicky replied, skipping the part about Amazon, saying direct air capture is going to be a huge part of our future. But I'm most excited about the direct air capture because of where we can put it, and the maritime industry, the airline industry, the tech industry. In other words, it has multiple applications and lots of potential future revenue streams. Dan squeezed in one last question. He said, how about the cost competitiveness and the cost curve of the direct air capture? Vicky said, it's not going to take very long for us to get to the point where the tax credits are going to be necessary. Most negative comments from those who have reason to say that solar and wind are profitable today, direct air capture will never be. That's where she hears the most negative comments. The reality is that there's never been a commercial plant built where you can optimize the process like we are going to do. Good job, Vicky. Jeff Alvarez made a comment in reply to someone's question and said, talked about capital efficiency. He said, I wouldn't have expected us to be as low as where we are today. This is talking about CapEx, as if you had asked us 3 years ago. Our capital intensity in the resources industry will be half this year of what it was 2 years ago. Isn't that amazing? And this is largely driven by our improvement in the unconventional businesses, both in the Permian resources going from 37 to 33, and also in the Rockies, it came down to about 33. Interesting, huh? You know, we often have discussions, we talk about break-even points and things like that. So it kind of gives you a little bit of guidance in terms of where the costs actually are and the good job that the management has done to date. Rafael Dubois from Societe Generale talked about hedging for crude oil. Rob Peterson responded and said, Oxy is not regularly engaged in hedging. But we did, to your point, with our increased leverage, that was last year, take on an oil hedge in 2020 that had a collar, and then it also had a call provision in 2021. So the only thing remaining is that of that oil hedge is the call provision for 2021. We evaluate the cost of doing so versus the cost of not doing so. You know, there is a cost to doing it and there's a risk of not doing it. So those are two things that just need to be balanced. He also asked about restarting the wells in Texas after the cold wave. I'm not sure if the cold wave is over, or if it's gone, or if it's still impacting the oil companies in the Houston and Dallas areas. Vicky replied and she said, we have got 90% of our production back up, the chemicals in the oil and gas. The good thing is we don't see any permanent damage with anything, and the wells are starting back and it's looking very good. Another question from Phil Gresh from JP Morgan about the capital budget. This is interesting too. CapEx guidance uses a $40 WTI price. And as I said a few minutes ago, we are currently sitting at around $60 or thereabouts on WTI. Yet the guidance was for 40. So Occidental is in a very good spot right now. Jeff commented and said that it's a pretty good guide to use a $10 change in the commodity price. Well, even if you go down $10 from where we are today, you're going to 50, not even 40. And of course, if you go up another $10, then Oxy is ka-ching, printing money. Jeff also added, we haven't seen a correlative activity change that we historically see with that. GOM is the Gulf of Mexico. Jeff added that the Gulf of Mexico is interesting. Its capital tends to be a little bit more lumpy. It comes in bigger chunks than it does in the Permian. And one well doesn't just cost a few $1 million. Oxy Drilling Dynamics is coming in at a cost of 35% less than where we were in 2019. If you looked over a 5-year period, I would expect the sustaining capital to be higher than the number we had this year. In the Rockies, we're 27% better than what it was in 2019. In our EOR business, they pulled $350 million out of the OPEX last year. This is quite incredible. Good management job by Oxy's executive team. I'm going to wrap it up here with this last slide is climate-related commitments and targets. And I'm just going to add a little commentary here and say, you know, guys, this is the sort of proverbial elephant in the room. All the oil and gas companies have to pay attention to the new green technologies, the new green industries. Occidental certainly seems to be ahead of the curve in that regard with Occidental Low Carbon Ventures. I look forward to Q1 2021, even though I have to wait a whole lifetime in order to get those results. But we'll see how we go. In the meantime, let's see what Oxy does. Certainly the price currently sitting around $28 has rewarded us nicely for being patient and trusting our thesis for making this Occidental investment. So on that bright and sunny and breezy and wonderful smiley note, I'm going to sign off and say thank you for watching. I wish you well. I hope your Occidental pays you handsomely. Take care, and I'll see you next time. I look forward to connecting with you in the comments. Let me know what you think, and we'll take it from there. Bye-bye.